This show is about your life, how to make it better, how to make more from it, how to love deeper, how to share it with others. This journey is about connection to your dreams, with topics centering on love, money, sexuality, and energy that unites it all. This show will change your life. For years, I've coached people in easy-to-learn skills and have seen incredible changes. I'm here to teach you those skills as a coach and hopefully a new friend. Hi, I'm Kyle. Come along with me as you move along your path of life success. Welcome to the Kyle Phoenix Show.
Most people don't like to pay taxes, but if you understand how the tax system works on a pretty basic level, then you can understand how much you should be paying and how it's actually computed what your tax rate should be. So you have to think of it this way. Federal income taxes are computed like this. The first portion of your taxable income, which is determined after deducting both the standard deduction and a personal exemption from your total income, is taxed at one rate. Earnings above a certain level are taxed at a higher rate, and so on in steps. So let's use the 2008 federal tax rates as an example, and you'll see that this is coming up on the screen now. For a single person, your first $8,025 is taxed at 10%. So if you earn, say, $8,000 a year, maybe you're working part-time, you're only going to pay 10% of that in federal taxes. So the rate actually would increase then if you see that $8,025 is a 10% tax rate. At 15%, when it's $8,025, $26, all the way up to $32,550, you pay 15% on that, plus an additional $802.50. So if you made $8,026 in the year rather than $8,025, you would actually, instead of paying $800 in taxes, you'd pay 15%, which is over $1,200 in taxes, plus an additional $800. So you'd pay for that $1, $2,000 more in taxes. So your take-home, instead of it being $7,200 when it was $8,025, would actually then become $6,025. That's why it's so important to understand what your tax rate is. So you see that it goes 15%, goes all the way up to $32,550. 25% is $32,550, all the way up to $78,850, plus an additional $44.81.25. Now you can understand, just by looking at this chart, the way the country is built upon the middle class. When people talk about the middle class paying more in taxes, how that actually happens. Because the approximate median income of a U.S. household for an individual or for a small family, which would include two breadwinners, is about $36,000 a year. So what the federal government is looking at is the people who tend to make up the most of the country, who would earn over $32,000 a year, would be responsible for paying 25% of that in taxes, plus $4,481.25. As you earn more, the higher portions are taxed at higher rates. This means if you earn a little more and get bumped into a higher tax bracket, it's taxed at the higher rate. It also means that if you find a way to reduce your taxable income, you might save from paying at the highest rate. In addition, many states and local municipalities have income tax with their own rates. So you can pay your federal tax, you can pay your state tax, you can also pay your city tax, and you can also pay your local tax. So before you actually even get the proceeds of your work from a paycheck, you might actually pay as much as 50% of that money in taxes before a check is actually cut to you. As you start out on your first job, it's important to know that you're responsible for filing your own income tax return every year on or before April 15th from the previous calendar year. You're responsible for paying any tax owed if you fail to do so. The government can insist that you pay fines and interest on any unpaid taxes. You have a choice of accepting the standard deduction offered by the government or itemizing your deductions. Here's what that means. There are two kinds of forms when you're filing your taxes. The 1040 form. 1040 easy, you accept the rate that the government gives you, or You can do a 1040 where it's itemized, where you can break down and say, no, lots of things have happened in my financial life, things like school loans. Maybe I have a mortgage, I have mortgage interest, I have school loan interest, I had to pay some stuff out to school, I might have a small business. All of these different things have come in that might seem more complicated on one level, but generally people have more things going on in their lives that may actually affect their tax situation. In general, if you don't own a home or pay high state income tax, you'll often choose a standard deduction. So you say, you know something, I agree to this tax rate. Income that will be taxed includes your salary, money you make on taxable interest, bonuses, other income you see from tips, gains on your investments, and unemployment compensation. So here's a great thing that comes up if your job is someplace where you receive an end-of-year bonus, sometimes given out at Christmas. What lots of people ask the company to do is, rather than give them that money that tax year, let's say 2008, no, cut the check to me in January of 2009. So that money isn't subjected to being on my taxes for 2008, but will be on my 2009 taxes. So there are different ways that you can juggle things, split things up, and control your money so that more of it comes back to you. And remember, riches and wealth are created, whatever level you want that to be for yourself, not by how much money you have, not by how much money you make, but how much money you get to control. Because the more money you get to control, the more money you tend to have. You can reduce your income taxes and save money by contributing to IRAs and defined contribution plans that work like a 401k plan. Interest payments on home mortgages are also tax deductible. Now you see why people also buy property. You can't take anything from renting your apartment off of your taxes in most normal cases, and the IRS tends to investigate things for renters. But if you're a homeowner, it's assumed that you're going to take off the interest payment on that home mortgage. You should consult always a tax professional or a financially savvy family member about exactly how to do this. Somebody might be a level ahead of you, a mentor. Here in New York City, there's H&R Block. I actually first took a class with them. It's a really great thing, whether you want to prepare taxes or not, to take the $99, which turns out to be tax deductible, sit down for a few weeks, and actually take a tax class. You're going to be dealing with money for 40 to 50 to 60 to 70 years of your lifetime. It's amazing how many hours people don't spend learning about money and how much money is actually taken away from them, and they complain about it. There's no one to complain to. You're responsible for this.